Hello and welcome to NDTV Property. You're watching Earnings Edge. My guest today is from Lupin, Ramesh Swaminathan, who's the ED and Global CFO of the company. Ramesh, thank you very much for joining us on NDTV Profit. My first question to you is, you got a good set of numbers in Q4. At the beginning of the FY24, we were discussing about how you're going to play out the margin expansion. Do you think that the margin expansion is now fully achieved, or there is still some room for margin to expand from here on?
Firstly, very happy to be on. Thank you for that. Insofar as the margin expansion is concerned, you recognize that the competition is actually ahead of us when it comes to overall EBITDA margins. So we do believe that there is more to be done to actually achieve a core EBITDA margin of 22 to 23%. And there would, of course, be spikes in that as and when a good product comes up and so on. So 22 to 23% should be, in fact, the normalized levels that we should be kind of focusing on. We have been doing exactly that. As you can recognize, there has been tremendous buoyancy on the top line in the last several quarters with the kind of products that we brought to the market. There's tremendous focus on, in fact, building up the gross margins, which comes from routes to synthesis, from, in fact, the alternate vendor strategies and the like. So overall, the gross margins have been going up. There's also a tremendous leash on overall cost itself, and that could be evident across all lines, starting from manufacturing costs to potentially your SG&A costs. Your manufacturing other expenses have come down to about 30.5% and the like. This despite the fact that there has been a tad increase in terms of R&D spends itself. So EBITDA margins at 20.5 are good, but more work to be done for sure.
Mm-hmm. FY25, your target is 22 to 23% in EBITDA margins. What are the kind of levers that you have going into FY25? What kind of triggers are there that will help you further?
I'm not saying that we're going to achieve 22 that level immediately. It is obviously going to happen over time, but the focus is really on. In terms of the roadmap for it, obviously more work to be done when it comes to, in fact, putting the clamp on a lot of inefficiencies that there were in the system, focusing on, in fact, higher productivity across, and of course, keeping the top line buoyancy with newer products. All of this would potentially be, focus areas for us. And that's the way we have delivered in the past, and that's the way we're going to deliver in the future.
Ramesh, I have my colleague Varsha who tracks pharma actively. She's joining in here. Varsha?
Hello, sir. So my first question to you is, if you see what happened quarter on quarter, is there any seasonality effect? I mean, every March, do we see some seasonality effect in our business?
There would be parts of it which actually would be impacted by seasonality. If you talk about, for example, India, Q4 in a general sense is actually the weakest quarter. Then we begin with, in fact, Q1, which is, which should be much better. Q4 is because of various reasons. Essentially, destocking by stockists and the like could be one of the reasons. But there are parts of the world where Q4 is always very good, as in the case of Philippines and South Africa, which really don't move the market, the needle so much, really. In America, it's actually the end of the flu season. So there is some seasonality clicking in there as well. So there are parts which are impacted by seasonality. And that is what is reflected in the results.
Also, we've taken some impairment charges in Q4. If you can, just explain a bit about it.
Yeah, this is essentially the rupees 200 odd crores that we took as an impairment charge this quarter. This is essentially comprising of two parts. Essentially, products that we are, we have stopped selling in America and India. So we have taken, a charge on those, and there are a few assets, which we are, not using, which we thought that it would be better to actually have an accelerated depreciation associated with that, and that's the aggregate amount of 200 crores that you see out there.
Ramesh, is there any more of such charges that can come in FY25?
Well, this is a continuing business, and there would potentially be always issues of this kind that you need to reckon. So there'll always be products that we believe that and these would essentially be bought out products that which would have a carrying value, a book value, which we will have to take a call on from time to time. It could actually be assets. It could potentially be, and products, or it could be potentially, goodwill, if it came to that. So essentially, these are all moving parts which you can't actually forecast well ahead of time.
You spoke of the US markets. How is it doing in terms of pricing? Have you seen the competitiveness in pricing coming down, means ebbing a bit or bottoming out, considering that you are launching a couple of products in FY25-26?
Firstly, I think the pricing issue is really so much about on the OSD front. As you would recognize, we are pivoting to more complex products where there is more addictiveness when it comes to impact pricing. Essentially, inhalations or injectables, complex injectables, don't suffer the same kind of jolts that you find on the OSD front. But even on the OSD front, in fact, it's been a more benign situation in the last last couple of quarters, essentially coming in because of the fact that a lot of people have shed their portfolio, and also because the fact that companies and factories have closed down because of the rising interest rates and the need to kind of deleverage the business itself. I do hope that it kind of continues in the future.
The street is little, gung-ho on the new launches that happened in the US market. You had Prolensa, generic Prolensa, then the generic Chantix and generic Mirabegron, been launched. How is the initial response to them, and what kind of pricing erosion have you seen so far?
So there are two parts to your question, and I would take it in two ways. One, insofar as any generic product, on introduction generally has a huge upside, and thereafter a huge, there's a continuous downside. And that would be true in some of those products that were introduced in the past. In the current context, of course, we have a couple of products that we have introduced, one of which is actually at risk. It's a Mirabegron that you just spoke about. Doxycycline is also that we have introduced. And it's early days, but we are fairly confident about its success given the limited, competition for these. Apart from, of course, the products that still continue on the respiratory front, albuterol, Spiriva, which are really big hitters.
Also,
just to get a confirmation, the street is expecting nearly $100 million coming in from the 3 drugs that you launched per year. Is that a right assumption the street has on these drugs?
Well, you're welcome to your the numbers that you're speaking. Essentially, as far as we are concerned, we don't talk about product-wise details at all. But there's a lot of numbers being speculated at the street level.
But are these numbers in ballpark range?
No comments on that score. These are all decent products, and there's limited competition. I would just leave it at that.
Mm-hmm.
Also, any comment on your API business? Because I see that it's a small business, but it has been a drag, at least in the recent past that I understand. So any view on that?
The two things that I need to state there, the huge chunk of our API business is also because of cephalosporins, and given the Pen-G prices, they've actually taken a beating in recent times. Pen-G prices ruled at an all-time high of $22, $23. But in the last few quarters, last few weeks, you have been seeing a downtrend. Today it's at a much lower level, $14, $15. And that would actually mean that this business could pick up. The second part is, we've also spun off, 2 of our factories in anticipation of, in fact, getting into a new business paradigm out there with potentially API CDMO, play. And we're working on that, and you would see more results coming by from that score.
Give us some more details of that. By when do you see that entire play coming in the entire ops? Because I've seen many pharma companies with API are now also looking at CDMO, another business line which is there. So, how much time will it take for you to scale that up and bring in the revenues from that segment?
We do see tremendous potential coming in from that. We're working on 2 platforms. One is essentially the fermentation, where we do have, in fact, tremendous expertise. The second part is newer products on route synthesis. We are fairly confident about actually making it big in that space over time. It's still pretty early days, so the spin-off actually happened in November last year. We're working on it. and with the minimum capital expenditure, we do believe that we should be able to kind of bring in a lot more products out there, which would help in actually taking this business to a very different level. There are a lot of tailwinds associated with this business, given the China Plus One strategy and the focus on actually bringing in manufacturing into India. And from that perspective, it certainly doesn't surprise me that there are a lot of others who would also like to get into this space.